What's up, everyone? It's April 29th, 2025. We had a cool day in the market, super sideways. Generally, when we have a trading range, the expectation is trading range in the first half, a tradable leg in the second half, and then trading range at the end of the day. So we got today. So yeah, let's get into it. I'm give a quick shout out to the members and subscribers. I'm dropping a new members video this weekend about gaps, and yeah, there'll be a series of videos, and this one will be about gaps. So stay tuned for that if you're a member. If you want to be a member, hit the join button below. It's right next to the name. Price action breakdowns. Join. Click it, and then yeah, it'll be fun. Anyways, here we go. Daily. This is the daily chart. This is the 15-minute chart. Breakout, or excuse me, trading range behavior. Breakout. Leg 1, pull back. Leg 2, pull back. Leg 3. We're in a trading range. We have bears are selling off here. Bulls bought the lows, and we rallied almost to the trading range highs, and then we had a pullback. This ended up being a complex pullback, somewhat of a wedge bottom. Push 1, pullback, push 2, pullback, push 3. Bears tried to go down to make a new low 3 times and failed. Then we have a 2-bar reversal here. This without making a square around is a 2-bar reversal, and it gaps up. Bad follow through around the EMA. It rallied and then sold off. But bulls rallied, sold off, so bears are still selling the swing high. But then the following bar right here, it sells off. Bears are looking to close the gap, and they get trapped, and again another rally. First bull bar above the EMA in a long time. Last time we had a bull bar, got sold. Last time we had this bull bar, and then we have a touch here, it sells off. Touch here, it sells off. So price, the context is somewhat changing. However, just such a strong sell. Usually the first gap bar, so this is the first gap bar right here. This breakout bar is faded. Bears want to get to 1R, close the gap, and keep going. Bulls want this to be the start of a new breakout. But already, this breakout's weak. Well, depends how you see it. The breakout could start here, and now we're starting to channel higher. Or you could say the breakout resets here, pullback, breakout, pullback leg 1, pullback leg 2, pullback leg 3. Somewhat of a wedge top, still bull bodies. So on a smaller time frame, we can see when we go to the 5-minute time frame, we'll be able to see how these tails were formed. This is the overnight session starting out as a bear bar, but it's only been open for an hour. Here's a 15-minute chart. Just mentioned how if we go to a smaller time frame, we can see what the tails are made out of. And here are those tails. So we have a gap. Where's the pen? We have a gap up right here. That's this gap up, and it sells off. This sell-off is this tail right here. Then we rally, and then we see the breakout bar. We start to go sideways, selling off right around here. We have another tail right here, so that's when the new highs put in here. We have today's price action. It's also a wedge top. So here's a wedge top. Here's a form of wedge top. Here's a form of wedge top. Lots of wedge tops. So in a bull trend rally, however you want to call it, there's going to be a lot of wedge tops. What's important is that we're not shorting every single one. You could make money. This is a 15-minute chart, so you could short the new highs for a scalp. But the easier trade is to go with the trend. We're on the smaller time frames. We're above the 45-minute EMA, so the regime is bullish. And yeah, I like to trade breakouts. So let's talk about breakouts are first principles within the market. The market has 2 first principles, and that is the market is either breaking out or reversing. And over time, you will learn that a reversal is just a breakout happening with different type of traders. A traditional breakout is a limit order. Excuse me, I said that wrong. So there's limit order bears right here. They have limit order set at the swing high. A traditional breakout is going to trap the limit order traders and keep going. A reversal, so let's say this is a reversal right here. It's trapping stop order traders and going down. So limit order traders on normal breakouts are getting trapped, and on reversals, stop order traders are getting trapped. Because you can see on this bar, the market actually went 1 tick above. This bar right here traveled 1 tick above, so stop order bulls got filled and then it sold off. They're going to buy more at 50%, and when it comes, they're going to buy more lower when it comes back to that 50% of their entry, they're going to hit out. That creates context for leg 2 because bulls are selling and bears are selling pullback. Bulls are selling out of a losing position. Bears are going to sell to start a position, or maybe they're going to press their position because they got short right around here. So the same context is happening over and over and over again. And we can look at the market cycle to figure out how that context plays a role in our trading. Market cycle is breakout, channel, trading range. I think yesterday, what was yesterday? Yeah, we've been in trading range for a while. So look, so now we just looked at the daily chart. Remember that big gap up? Actually, I want to see April 24th. Yeah, so that's right around here. Right here. So here's that big gap up and it sold off. So remember sorry guys, if you guys can hear that bike in the background. Big gap up, puts a big tail. So we're looking at this, I'm talking about this bar. Right around here, puts a tail, sells off, creates a double bottom and starts to rally. But it's a weak rally because there's lots of tails after. We're in a trading range, big down, big up. So we had the breakout, and now we have the channel starting right around here. And now the market's channeling higher, and now bears actually start to get a good leg lower. So now we're in a trading range going more sideways. You can just see how the bulls look right around here. New high, shallow pullback. New high, okay, a little bit deeper. New high, and we go into the EMA bounce. Channel higher. What I'm trying to describe here is how the bears are slowly turning the momentum. Think of a giant cruise ship. It takes a long time to turn the momentum. It takes a long time for that cruise ship to turn. Just like in the markets, it takes a long time for that momentum to turn. So now bears are starting to get bigger bars. Now they get a nice micro channel with a few bear legs down yesterday. Bulls rally, they buy the touch of the EMA. But then we go super sideways. So you could say the trading range started here, but for today's specific context, you could say this trading range, if this was a breakout, what is that? I think that was 7 bars, right? Yeah, if this was a 7-bar breakout, here's the channel. So market cycle, breakout, channel, trading range. Breaks out, we start to channel higher. 78, 79, all the way down to today's one low, starts the trading range. Bulls are buying previous swing right here. It looks like it's the 64 swing. Bar 1, bull bar closing on its high. Bad follow through bar 2, but it shows the tail. So bulls are willing to buy. They're just not willing to buy high. They were buying lower. Bulls are buying pullbacks. They're not buying high. Bar 3 breaks out above the EMA and gets a bull gap. Again, I'm going to be dropping a gap video this weekend about just the basics of gaps and how I use them for context and trap traders. This is trapping limit order traders right here. We get follow through with bar, what was that, 4? I'm starting to think I need glasses. 2 gaps, that's good for the bulls. However, bad follow through 5 and 6. There's still a rally. Here's a rally. Here's a rally. There's a sell-off. So bears, so it's trading range that has more tail than body. Bar 7, big sell-off and rallies higher. So there is a bear channel right around here. So although the bear channel, this is the first bear channel we see. With this tail, we do know now that there's a bear channel down here. This bear channel tests the high of 1 and then rallies back up, creating a reversal. If you're looking to buy this because you think it's going to go on for a start to be a bull trend day because of how much it reversed, you're also buying into a third leg 1, pullback, leg 2, pullback, leg 3. And generally, third leg characteristics are trading range behavior. Bar 8. Rallies, sells off just around this midpoint. It's a trading range bar. There's more sellers sitting above the swing high of yesterday, 79. Then we see bar 9, inside bar. I think if you see an inside bar or bar 9, it's best to get out of longs and wait for it to see what happens around the EMA or pull back a high 2 in this situation. Ended up selling off, creating a bear channel lower, bar 10. Bear bar closing on its low with there's a gap there. It's very small. Should be red. Another gap here on bar, what is that, 11 and 12. So now look at this. We have 2 gaps open here, and they get closed 11 and 12. 12 doesn't necessarily close below 3, but it definitely tested it here and here. Trading range behavior, a characteristic for trading ranges is gaps get closed. So right away within 12 bars, we see gaps get closed. So we already know, okay, we have a bull channel, 3 legs up. We have a bear channel, three or 4 fractal legs down. Now, so that's one way to read that we're in a trading range. And the next read is that, hey, look, gaps are closing. So multiple reasons to think trading range behavior today. 13, bull bar closing on its high. 14, good follow through. I think these bulls made 1-1. I didn't trade today. I had a scheduled power outage. I don't know if it's going to be happening tomorrow again, but PG&E's been doing work around the house, that one of the house poles, so hopefully be able to trade because I'm definitely ready to go. But if not tomorrow, then definitely hopefully Thursday. So 1-1 here. I saw this trade and how it got filled on 26 and 1-1. That would have been a trade I would like to take. Nonetheless, didn't happen. Bar 15, bad follow through for the Bulls. I think it's becoming climactic. You could say like 1, pull back like 2, pull back like 3. I like to talk about how each bigger leg has minor legs within it. So if this was one leg, you could say like 1, pull back like 2, pull back like 3. Or you could say like 1, pull back like 2. Definitely different ways to count it. 16, bull bar closing above its midpoint but has a tail. We're coming up to that swing point here. And then 17 sells off, rallies. Bad. It sells off and rallies. It's a reversal bar for the bulls, but we're already at this swing high, and we're trading range. So generally, every new high is going to bulls will take profits at new highs. 18, nice looking bull bar closing on its high late in the trend. This might be a better sell than a buy because of the context for multiple 3 legs higher. 19, bear bar closing on slow. 20 is acting as a pullback. Leg 1, pull back, leg 2, pull back, leg 3. Leg 1, pull back, leg 2, deep pull back, leg 3. Okay, so there's no gaps there. 1 second. Okay. So yeah, where are we? 23, 22, bear bar closing on slow, bad follow through 23. 23 is testing the breakout point to the left. Sometimes I forget how to use this thing. Okay. 23 is testing the breakout point to the left here, testing this gap. It's good for a quick scalp, but it's a hard scalp because bears are looking for one more leg down for 20. Well, the spike starts here. So from this spike down, bears want one more leg. And they meet that with 25, 20 in the low of 26. Rallies, again, 26 is testing the high of 13 for 2 legs, leg 1, pull back leg 2, and a shallow pull back leg 3. That's a higher low right here. Remember, 3 types of trend line breaks. There's, in this situation, bulls want a new high, and they do actually get the new high here. So, but specifically for this context, leg 1, pull back leg 2, trend line break, 33, 34, 35 here. It's a higher low. That's bearish price action. Anyways, where are we? I'm kind of jumping around. 26 sells off, reverses again, 3 legs down for the bears. Leg 1, pull back leg 1, pull back leg 2, pull back leg 3. Rallies. That's a wedge bottom in a bull regime. It's a good buy. And then bulls barely get 1R 26. I don't think they do actually. Yeah. They do, but you have to wait. I want 1R right away. I don't want 1R with a pullback. 26, 28 being the pullback. 3 legs lower for the bears. Push 1, pull back, push 2, pull back, push 3. Same situation, wedge bottom in a bull regime. It's a better buy, 31, 32. Now we have 3 legs higher, leg 1, pull back, leg 2, pull back, leg 3. It's a wedge top. Bears are shorting this, 33s inside bar if you're long. Safe to get out because you're risking the market collapse. And in this case, it did collapse. Testing 12 here. It actually never made it, so it tested. There's a bull gap I didn't draw right there. Testing the bull gap. 37, bear bar closing on its low. Bulls actually got 3 pushes up too, so there's a wedge top right here. Push 1, pull back, push 2, pull back, push 3. Sells off 37, 39. Bulls are still trying to buy the EMA. The bulls that get trapped here buy more lower. They get out here, they make a profit on their second entry and get out a break even on the first. 41, big bear bar. It's climactic. It's moved too far too fast. Bears are going to take some profits. And they do. You can see the bad follow through. 41. 42, sells off, closes around its midpoint. Not the best looking bar for the bears, where we are still above the higher time frame EMA, 45-minute EMA. So that generally means we want to favor bull setups or I said that wrong. Bear setups have a higher probability of failing. And when we're below the EMA, bull setups have a higher probability of failing. 43, inside bar. 44, small bear bar closing. It's kind of a trading range bar. It's happening at the high of this training range put in by 42 and the 41 in the low 42. 45 sells off, closing on its high. But the context for this long worked, but I do think it's okay to buy the high right here. First gap bar is going to get faded. This is a weak trend. It's a probable channel. Bulls get a breakout. In the beginning of the video, I talked about how the expectations for this day is generally sideways price action, one tradable leg, sideways price action. And here's that tradable leg right around the middle of the day. You can timestamp me in the Discord. I said in the middle of the day, there's going to be a tradable leg, and then we're going to go sideways. So here's that breakout, leg 1, pull back, leg 2, pull back, leg 3. And here's the training range highs. Although this is breaking out of the training range, it's also breaking out in a third leg. So leg 1, pull back, leg 2, pull back, leg 3. And that means that probability for continuation or a measured move of this bar go down significantly because we're in the third leg, so the market cycle says training range behavior. So if you're buying the high of, if you're going to buy this high, you have time to scalp out. But if you're going to buy the high of 52, you have to be careful because you're actually buying the high of a third leg. You do have you have about 15 minutes to make a small profit. I mean, you could actually hold this position and get out almost all the way up to bar 77 at break even. I hope you don't hold that long, but if you did, you had a lot of grace today. Sketchy, but you did. 53, inside bar, best to get out of longs because inside bars are the only bars not breaking out. The market could go either way. 54, rallies but then sells off again. We have a triangle here. We get a breakout. And when we get a breakout, that breakout can rally and then come back to the middle of the triangle. And so think of a smaller time frame. Look at 56. So 55 breaks out, 56 comes right back to the middle of the triangle. Go down to the 1 minute. There it is, see? Here's the triangle, so there's the breakout, here's the triangle, pie pushes, it breaks out, and it fails, coming back to the middle of the triangle. Then we go sideways for the rest of the day. It's been a minute since we've seen a tight trading range. Hope you guys did good in that. Let me know how you guys did with the trading range at the end of the day, because this is a tough one. 56, 57, 58, 59, these 4 bear bars, multiple things going on. So first of all, there's a bear channel, but there's also 3 legs down, and there's 2 legs with it. So let me count. Leg 1, pull back, leg 2, pull back, leg 3. Okay, that's a fractal leg. Leg 1, 56 breaks the trend line, or excuse me, 57 breaks, 58 breaks the trend line. Leg 1, pull back, leg 2. Bad ball through bar 59. Then bulls get 2 legs higher. You could say 3, but we'll just say 2. Leg 1, pull back, leg 2. Testing the high here. 63, bad fall through for 62. The bears get a few legs lower. Leg 1, pull back, leg 2, pull back, leg 3 into support. We start to go sideways for the rest of the day. Opposite bars, you could buy it, rally. If you're going to trade, this is a limit order market, so you scalp the low, scalp the high. But this is a tight trading range. I'm trying to, about 16 points. So very easy to get trapped if you're buying highs and shorting lows. Let's do some of the measured moves. Coming up on 18 minutes here. So I would trade. So I do just 2 types of measured moves. There's shade ranges, there's leg 2s, and then I go for 1-to-1 of bars that get 1R. So here I'll get filled on 7 and out on 8. That's my favorite type of trade. Same situation with bar 12, right? I guess I would never get filled on 12. Let's see if 13 does get 1R. I measured it earlier. Filled on 26, out on 27. That's a nice one. It's a limit order day, so I'm doing limit order trades. This wouldn't work out for me because there's a pullback, so that means there's already 3 legs up. I don't know if I would take any of these bars because we're on a bull regime. I would see this breakout and hope to I would rather take 50, bar 50. Bar 50 I would never get filled, so I'd just be sitting here while the market's oscillating. Bar 56. Bar 56 never made. Yeah, none of these bars are making 1R, so I'd never have it set up. Trading range behavior, one could argue a measured move. Measured move never happened. Maybe the overnight session completes it. Let's see what's going on. Oh, it's a bear channel down. Okay, so there you have it. We're touching the EMA, 4 bear bars lower, but there's also, so what, leg 1, pull back, leg 2. We'll see what happens if bears get another leg breakout below the EMA and we start to rally, because there's also a leg here from the previous session. Hi guys, thank you for your time. Thank you for your support. I appreciate you guys. I always appreciate all the questions you guys ask me. Thank you to all the new subscribers and members. And I will look forward to talking to you guys tomorrow. Again, I'm dropping a members video this weekend. It's going to be about gaps. Have a good one, everyone. I'll talk to you later. Thank you for your time. If you learned something, share the show. Don't be a hoe. Have a good one, everyone. Bye.